Hey everyone, and welcome back to Data Driven Value, where we show you the tools and teach you the skills, as well as keep you updated on these markets to give you that edge, as well as help you take your financial freedom into your own hands. Today, we're just going to get right into some news to start things off. So, start out with a bit of bullish news. We do see here BlackRock CEO Larry Fink advocating for tokenization of stocks and bonds. So, we've talked a little bit recently, kind of in some of the altcoin coverings, about real world assets or RWA as a potential narrative going forward in this cycle. So that's essentially, again, this is the tokenization of real world assets on the blockchain. So in specific stocks and bonds, we see obviously one of the biggest asset managers in the world advocating for this. So super bullish. We see here in a recent public statement, Larry Fink, CEO of BlackRock, expressed his support for the SEC to approve tokenization of stocks and bonds. The trend is aimed at converting financial assets into digital tokens on the blockchain networks. And if we can manage, or if we can tokenize bonds and stocks, it will democratize investing in ways we can't imagine. So this is kind of the beauty of Bitcoin. Where it comes in is kind of that financial equality and financial inclusion. So a lot of people in the world, they don't have access to the same investment or banking services that a lot of us do have in the West. A lot of Westerners kind of really take for granted the what we do have available to us here. Furthermore, kind of some of these citizens in these foreign countries, they're subject to their central banks' actions as well. So we've seen in cases like Venezuela and Argentina where they've just kind of printed so much money that the inflation rate went beyond like 100% year over year. So really hard for everyday people to kind of stomach that increase in prices. You can really see the difference just in our rate of change of inflation, how much harder it was for you to be able to kind of make those cost of living payments. So everything kind of goes up. But again, if you're kind of in South America, Central America, you probably don't have a lot of access to investment vehicles, let alone banking services. So you're kind of, a lot of the times, I consider you're almost held hostage a little bit by the Western Union. So you're just subject to paying these ridiculous fees, and you don't have the same opportunities that people elsewhere in the world have. So by tokenizing stocks and bonds on the blockchain, I feel like this is just going to give a lot more investors kind of throughout the world access to these vehicles. So, and I'm sure it will attract a lot of investment from foreign countries just due to their own governments and their central bank actions. So we can see here, obviously, the goal of the initiative is to revolutionize how investments are accessed and managed. So obviously more inclusive. And then we see also acknowledges that the challenges related to regulatory approval may have an impact on the market, particularly bonds and stocks. They could potentially enhance investment accessibility. So that's what I was just talking about, making it easier for a broader range of individuals to participate in the financial market. And yeah, financial inclusion and equality is an important thing in my mind. It's one of the reasons I really like Bitcoin and I do believe in Bitcoin. I've traveled to some of these parts of the world, and to actually see people able to utilize crypto services to start their own businesses, whether they're just selling things on the street, whether they're running a restaurant, or just any kind of family business, you really see more actual adoption from these people because it just gives a wider, essentially a wider audience base. More people are willing to kind of interact with them. I always went out of my way to kind of really support these people because they're doing their best to kind of get out of the system they've been stuck in. And that's what a lot of us, our goal is with Bitcoin and crypto, is kind of just look at the alternatives outside of the system, because that system kind of historically has really favored a certain group of people. Yeah, so good to see, yeah, kind of more financial equality and inclusion really being advocated for here. We also see that the regulatory approval in particular is going to be a major hurdle that needs to be addressed. However, there is a new task force at the SEC, a lot more crypto-friendly administration currently in the office. So it wouldn't be out of the realm to expect kind of, yeah, easier regulatory hurdles. That might be a little bit less now that Gary Gensler's gone. We see here the comments from the CEO of BlackRock, one of the world's largest investment management companies, underscore the increasing interest and potential for digital transformation within the financial sector. So yeah, lots of big asset managers really starting to explore this asset space. So it's an exciting time to kind of be involved in it. And yeah, we'll just watch that going forward. But RWA, or tokenization, is really a narrative we're going to be following for the remainder of the cycle, and potentially looking to kind of position ourselves in assets that might benefit from this kind of further tokenization. I'm moving on here quickly. A little bit of more bullish news. The SEC here, Staff Accounting Bulletin number 122. So essentially, they're rescinding the SAB, the previous accounting bulletin SAB. So essentially, this previous bulletin prevented banks from custodying Bitcoin or crypto, and even kind of prevented banks from allowing their clients to even access Bitcoin or crypto services. So nice to see this is rescinded as per kind of one of Trump's promises on one of his executive orders. So yeah, we do see that's gone now, and banks are basically in the future, banks should be able to custody Bitcoin or crypto on behalf of their clients. I like to self-custody my own Bitcoin and crypto, just kind of based on philosophical reasoning. But a lot of people don't feel comfortable taking that risk. They would rather just have a trusted kind of financial entity just taking care of the actual custody side of things. So yeah, good to see this is rescinded now, and just allows for more opportunities for banks and investment firms to kind of keep branching off into Bitcoin and crypto. Again, so this is a bit of bearish news here. So we see the Bank of Japan raise their short-term policy rate from 25 basis points to 50 basis points, so 0.5%. Still really low. We see the board raises their price targets. There's brightening wage outlook. They do see price risk skewed to the upside. Markets are stable. And they also say rates still below neutral, so signaling more hikes. Yeah, so definitely they're still battling inflation. Their inflation is going up as well. So we do see that more rate hikes are on the table still. So don't want to discount this fully yet. We did see back in July, there was, from the initial rate raise from 0 to 25 basis points, we had about a 9% correction in the SPY. A lot of that was due to this Japanese yen carry trade, which I'm going to get into a little bit, just to kind of give you a bit more understanding of what goes on behind this, and why this raise of interest rates is kind of important for the overall markets. So we can see here, um, divergence is causing volatility. So for many years, Bank of Japan maintained extremely low or negative interest rates. The U.S. Federal Reserve and other central banks maintained higher rates to combat inflation. So the country's low interest rate environment was highly favorable for investors engaged in carry trades. Essentially, people would be borrowing money in the Japanese yen because it was zero interest, and then taking that money and investing it into assets that they thought would yield better returns. So as the interest rates get raised now, there's a lot of people who still have these loans in the Japanese yen, and now the interest rate environment is different. It affects the loans, and then they kind of have to unwind some of their risks. So, that's kind of where we're seeing that kind of dip in the stock market is just due to this unwinding of this carry trade. So we see now, as Japan shifts from its ultra low rate policy, the rate gap with the US and other economies is beginning to narrow, possibly resulting in significant volatility and unwinding of the carry trade. So again, we saw that a little bit in the previous, in July when they raised the rates initially. Hard to know if we're going to experience that again, but it is possible. So we're just watching that, especially with Bank of Japan signaling potential further rate cuts. But we can see here Japan's rate path is diverging from other major economies. So while other economies like the US and kind of Europe, Canada, everyone's lowering rates, and we see the Bank of Japan actually raising rates. So going on a bit of divergence here. And then, yeah, again, if we do continue to see more rate hikes from the Bank of Japan, it could just mean more market volatility. That being said, I will show you in a minute here kind of the last time we saw this, and it actually presented a pretty good buying opportunity. So lots of the times, yeah, we just want to keep these events in the back of our minds, and then if we do see a bit of a kind of crash around this, then it might offer, again, a bit of a kind of mid-curve buying opportunity. Yeah, so again, we see crucially the volatility is likely to continue. Anticipate another interest rate hike in. So yeah, this was an old article, and yeah, we did get that interest rate hike yesterday. In addition, politics in the U.S. and Japan, along with potential fiscal expansion and rising geopolitical tensions, could further contribute to greater volatility. So lots of different things going on in the world that could cause some volatility in the markets. It's nothing we're going to be scared of. It's kind of more things we want to take advantage of. And again, we see the timing, the magnitude of the next moves from the Federal Reserve will undoubtedly have ripple effects on Japan's financial markets, as well as other markets across the region. So that's something that's an interesting topic right now. We have Trump on the one hand, essentially demanding rate cuts from Jerome Powell and the Fed. And then we've got the Fed, who's an independent entity. They don't make decisions based on political bias. Jerome Powell has said this in the past. So I expect Jerome Powell kind of just to stand strong in his stance here, essentially kind of just keeping rates where they are for the time being until inflation just shows a little bit better signs of coming under control. It is a little sticky right now, kind of just shy of 3%. So still quite a bit above that 2% mandate that the Fed is aiming for. But a lot of people do argue that's kind of an unrealistic mandate as well. Kind of thinking that a 2.5 to 3% inflation rate fluctuating might be a bit healthier for kind of a growing economy. But that being said, the Fed has stayed strong on their 2% goal, and they have, just due to the recent economic data, they don't have any reason to cut in the near term. So even though Trump's demanding that he cuts, again, yeah, he said he does not make his decisions based on political pressure. So we'll see what happens there if Jerome Powell obviously stands tall and sticks with his word, or we'll see kind of what Trump tries to do to pressure him to make the decision that he wants. We see here, U.S. and Japanese markets are far more correlated than most investors realize. The interconnectedness of global markets was evident during the carry trade driven volatility in August 2024. So that's what we're going to show you here. When it did take place, I think they raised the first rate on July 26th. And then we saw a couple weeks of volatility after that. So we'll watch for that in the coming future. You see many investors held multiple layers of positions, including options and pairings with various emerging market currencies. So when the tides changed and the markets experienced that volatility, a lot of these traders wanted to de-risk their really risky investments. So that's kind of the whole unwinding thing. And yeah, it triggered massive widespread sell-offs in equities, and then that impact reverberated across global markets. We do see here some new opportunities. We see that yields on the 10-year U.S. Treasuries, they're expected to go or converge with the 10-year Japanese bonds. So we may see a lot of Japanese investors start to see some value in U.S. 10-year bonds. Might see some capital liquidity start to flow into those. Bonds have been kind of beaten down pretty bad lately, so it would be good to get some new liquidity in there. And then just down here we see regarding carry trades, as long as there remains an interest rate differential, the carry trade remains viable. So as long as Bank of Japan's rates are below that of kind of the rest of the world, then definitely we will continue to see investors engaging in these carry trades. And then that also comes with the potential volatility for those to be unwound in the future, given any kind of unsuspected market volatility. We do see here a strengthening U.S. dollar over the next 6 to 12 months could reignite interest in the JPY USD carry trade. So yeah, we see the dollar. Dollar is doing well right now. It's kind of pushing up, not quite at all-time highs, a little shy of it, but it does look good. So we have strength in the dollar, and then yeah, we do see, given that short-term carry trades are currently subdued. So yeah, just a little bit of risk in the markets regarding that carry trade. And then I'm just going to show you here. So we had a bit of volatility going into it. The actual decision was on the 26th of July, so right around here. And then we actually saw we had a bit of a green day, a green bump that day. So I think that basically that was getting priced in here. And then we saw this dip, had a little recovery, but again, we just went up to resistance, got rejected, ultimately came back down, and then we bottomed in August here before continuing up to new all-time highs. But you can see that was about almost a 10% correction there, just taking place around that carry trade. So something we're watching here, if we were to experience similar volatility, then that 10% would bring us down to this 618 level on the SPY, which is something I'm watching. We do see we were able to break our highs just slightly, but looks to be like it might be rejecting a little bit here. If we take a look at our macro indices, yeah, we see the SPY, NASDAQ, Dow Jones, and Russell 2000 all red on the day. We also see the dollar coming down a bit. So that's good, actually. We did have this technical uptrend, which we are technically breaking on the lower time frame. So we do want to continue to see the dollar come down. And yeah, it's currently rejected from that resistance in the Fibonacci golden zone. I showed you that in a prior video. We'll just take a look now. So yeah, we've got that lower high, and then here ideally we might see a low, like a bounce around here, and then another attempt here. Essentially, the next high that we want to see, again, we want to see another subsequent lower high just for that potential to continue that downtrend and maybe catch a bid in some of these other assets. Um, Interesting to see Bitcoin's actually doing very well considering it's a risk-on asset. Gold, TLT, and silver all doing well as well. So kind of the risk-off assets doing well. Major stock market indices all down. The dollar's down a little bit, and Bitcoin is up. So yeah, interesting performance across the board there. But yeah, we will be watching the SPY. If we do get a 10% correction to that 618, again, that could just be a good buying opportunity in the near term. But it's something we'll watch and kind of take a look as time goes on, and then we'll make our decisions as the price comes into there. Otherwise, we just look for the next opportunity. Moving on, so we say here, this is what I was just talking about. Trump saying he demands the interest rates drop immediately. So yeah, saying Thursday he will apply pressure to bring down interest rates. Made it clear he would seek lower rates. I'll demand that interest rates drop immediately, and likewise they should be dropping all over the world. But this is what I was saying here. Powell and his colleagues have emphasized the importance of Fed independence. So they've said repeatedly that their actions are not influenced by politicians. How true that is, no one really knows. But Powell's been pretty clear in his wording over the years. He's been yeah. I would just listen to what he's saying. He has kind of followed through with what he said he would do. So definitely not fading Powell and his colleagues right now, and thinking that they'll just bow to the wishes of the new administration. So we'll kind of see what happens there. But yeah, it does not make decisions based on political considerations, and Trump has no statutory authority over the Fed. So yeah, no real authority for him to kind of force them to bring interest rates down. So expect them to kind of stay the same for the time being until that data really shows us that we can lower them again. Again, saying virtually no chance they'll lower its rate. First rate reduction likely coming in June, and a 50-50 probability of another one before the end of the year. So potentially only 1 or 2 rate cuts this year. Ideally, to see some of our riskier assets like altcoins really start to outperform, you want to be in a period of quantitative easing. So yeah, we really want to see these interest rates coming down, but we also want to see inflation under control. So we don't want to see inflation getting sticky or ticking up and then the government lowering the interest rates, because in the long run, it's just going to bite us in the butt again. Inflation's going to take off. They're going to have to redo that whole rate hike cycle. We're going to have to hike higher, and then it's just going to make for a whole bunch of market volatility. I think we're better off just kind of consolidating in the ranges or areas we are right now, and then yeah, really getting that inflation under control, and then we can continue cutting rates after that. We'll move on here. And then again, so we do see Trump coming through with a few of his promises on executive orders. So we do see he signs executive order to ban central bank digital currency. So this is one I'm really happy about. Nobody wanted a central bank digital currency except the governments because they want control of our money. But we do see here, Trump has now signed this executive order related to Bitcoin and cryptocurrency, banning the creation and issuance of a central bank digital currency in the United States. Agencies are hereby prohibited from undertaking any action to establish, issue, or promote CBDCs within the jurisdiction of the United States or abroad. And we do see it'll also establish a presidential working group to create a federal regulatory framework governing digital assets, including stablecoins. So that's going to include USDC. We talked about that in a prior video. And we do see that USDC is continuously gaining more market share due to their regulatory compliance, whereas Tether is actually getting delisted and losing market share due to their lack of compliance. So interesting to see that. And then going forward, I expect kind of more delisting to occur within Tether. But they also have said, like the working group has said they would work with Tether as well to gain that compliance, and then they could be included in this as well. So we'll see kind of what happens with Tether. It would be nice for some more transparency behind that stablecoin there, just given that it's the biggest one in crypto right now. And they're also going to evaluate the creation of a strategic national digital assets stockpile. So we have seen World Liberty Finance, that's Trump's team, buying some cryptocurrencies. They bought Wrapped Bitcoin, they bought Ethereum, they bought Tron, they bought Chainlink. They bought Athena, and they bought Aave, I believe, are the ones that they've purchased so far. But Interesting to see some official announcement regarding that strategic national digital assets pile. We do see here establishing such a stockpile potentially derived from cryptocurrencies lawfully seized by the federal government. And the stockpile is expected to include or be fully in Bitcoin. So this could be separate of that actual World Liberty Finance portfolio. That is a private company, I do believe. So we could expect what I think we'd see here essentially is that the US government currently holds almost 200,000 Bitcoin, worth about $20 billion. This was all seized from different illegal activities. So this is kind of what I expected from Trump. I didn't expect him to come in and start saying, oh, we're going to spend $1 million on Bitcoin a day. I kind of expected them just to take the seized Bitcoin and then convert that to a strategic reserve. Just by doing that, it's an easy way for him to follow through on his campaign promise without actually having to kind of put more capital into the asset itself. We do want to see kind of actual market buying from the U.S. And we have senators like Cynthia Lummis here. She presented legislation to create a reserve, but her bill would have the government purchase 200,000 Bitcoin per year for 5 years until a total of 1 million Bitcoin. So that would be pretty insane. Maybe we see something kind of between the two. Yeah, so we may see here, he's kept his word on Bitcoin-related promises he made on the campaign trail. So he gave a full pardon to Ross Ulbricht, who was the founder of the Silk Road, and he was, yeah. So he got a full pardon that was promised, and then we've got this wording kind of around the creation of a strategic Bitcoin reserve, as well as banning the CBDCs, creating a working group advisory council, and more. So nice to see he's actually following through with some of the promises. People were expecting them from day one, and when they didn't come out, I think they're a little kind of annoyed, or they thought they'd been lied to. So obviously nothing happens. Like Rome wasn't built in a day. So nice to see he's at least following through with his word later rather than never. Moving on here, this is kind of, again, what I was just talking about. The Coinbase CEO warns Tether may face further delisting under new U.S. stablecoin rulings. So I'm also sharing this just for U.S. and Canadian people who might have holdings in Tether. It might get a little volatile. It might be harder to access as kind of it gets delisted from more and more platforms. So you might look at maybe converting your Tether position to something like USDC that's more properly regulated and allowed within the US and Canada. We see here, though, Coinbase CEO expressed concerns that the upcoming regulations we just spoke about may require issuers to back their tokens fully with U.S. Treasury bonds. So Tether's backed by a variety of different assets, so not fully backed by U.S. Treasury bonds, which might make it an issue with compliance. It also promotes transparency and security, but yeah, challenges the offshore issuers like Tether. He did indicate that Coinbase would delist Tether if it fails to comply, but it also said they'll continue to offer USDT services in the short term to help users transition. So if you do have Tether and you don't get rid of it in time and it gets delisted, don't worry, you're not going to lose your money. They're still going to work with you to get you your amount. It'll just be like transition to a different stable coin like USDC likely. So that's interesting there, a little note. But yeah, interesting to see Tether losing more market share and Coinbase and the US really pushing for that American crypto, that USDC. So this is kind of an interesting topic regarding Bitcoin mining. So we did see here Quantum Blockchains. This is a company, I believe, in England or the UK. So we see here it's predictive Bitcoin mining artificial intelligence modeling tool here. Can be used to mine current blockchain blocks in real time with an approximate 30% improved performance. Potential to be a major breakthrough for the entire Bitcoin mining industry. Either reduce the energy cost of mining or increase the speed of mining at current energy costs by 30%, which it can prove through live demonstrations. So really interesting to see here, and some bullish news. I wonder if some of the bigger miners won't kind of take note of this and start exploring this option as well. But by utilizing their AI program, essentially they're able to increase their efficiency or their profit margins by about 30% for Bitcoin mining. So that'd be really beneficial, especially to some of the companies like CleanSpark and Iris. They already have such a low cost to mine. If they could increase that efficiency by 30%, it would give a huge competitive advantage over other peers that don't have this technology. And that's kind of why they say here it's potentially be a major breakthrough for the entire Bitcoin mining industry. So while I can't personally invest in quantum blockchain just due to the availability of the shares, it will be something I'm watching in the future. Maybe we start to see some deals with other larger miners start to kind of source their model mining tool here. So yeah, interesting to see. Mining's always getting more competitive, so good to see different ways people are innovating to really increase that efficiency or those profit margins. So I'll take a look over here at the miners quickly. So we see WGMI basically all green for the day, apart from cores and MicroStrategy. If you followed my recent miner video, we did share some entry opportunities in Mara, CleanSpark, Cypher, Hive, Hut, Iris, Wolf, and Bit Digital. So I shared entries for all of these stocks, but these are the ones that actually came back to their target zones and have bounced from there. So you can see we've got 1, 2, 3, 4, 5, 6, 7, 8 different miners that came back to those levels. So you can see here came back to the level of interest and bounced. So yeah, we see here, nice bounce there. So that's kind of why I look at these levels, and then we can see even just from this low up to there, it's a 13% move off the lows, but nice uptrend structure here. Managed to take out these highs. And then again, we're just going to look for that subsequent higher low. Maybe we come back, retest our bull market support band, bounce from there, and then continue up. But yeah, nice to see Mara, CleanSpark, Cypher, Hive, Hut, Iris, Wolf, and BTBT. Again, all coming within those respective zones that we targeted. And so yeah, you can also, we didn't hit all of our entries, which is fine. You're never going to hit them all. But that's kind of why we chart all of them, and then we pull the trigger as they come into the zones. We can see here we've got Cypher again bouncing nice. We've got Hive. Still needs to take out this structure here, so not as strong as some of the others. But yeah, again, just nice that it did bounce from that first targeted zone. Hut's doing well. Iris Energy, Wolf doing well. Again, yeah, nice move from Iris. So it did go quite a bit below our first target entry, but that's okay. We're still up 21% on that entry. And yeah, Iris is still one of my favorites, fundamentally speaking, going forward. Wolf, one of the bigger outperformers today. They did have some bullish news, kind of pseudo news. So they had a Cantor Fitzgerald analyst on CNBC, and I actually have a video that we'll touch on in a little bit just to show you. But so we do see here that essentially we had them alluding to a pseudo partnership with OpenAI and TeraWulf. So recently we covered a AI deal with TeraWulf and Core 42, where they're going to provide 70 megawatts of infrastructure for them for AI compute. So it is important to note that Core 42 is owned by G42, which has a partnership with OpenAI to provide them compute power and infrastructure. So we did see one of the Cantor Fitzgerald analysts on CNBC alluding to this pseudo partnership, and that's what he says. Essentially, they've got a deal with Core 42. Core 42 is owned by G42, who's inherently owned by MGX, and then OpenAI, who is using MGX as one of their energy providers. So no official announcement from management yet, but it is interesting just noting the location of TeraWulf's facility, as well as this recent wording. If we do get an actual announcement that TeraWulf is providing HPC or AI compute for OpenAI, I feel like that's going to garnish a lot of hype for the stock. It is nice. We came back into our support zone here where we targeted, and we got our buys, and they're up nicely right now. We can see from there we're up, again, another 20% or so. So Wolf's another one. I don't have the biggest position in them, but I did take advantage of this recent correction here just due to their AI news, as well as that potential for some open AI catalyst hype in the future. That being said, we will continue on down here just to BTBT. Another one that just entered our buy zone. Looks good here. We are getting just above our bull market support band, it looks like. And again, we are coming into this down sloping resistance. So we'll watch this. Ideally, we want to break out, retest, higher low, and then continue up on that breakout move. But we will just take a quick look here. So just looking at altcoins kind of now. I do want to just talk about the different kind of narratives that I had mentioned previously. So kind of the top ones I really want to focus on this cycle. I'm going to look at L1s, L2, so layer 1, layer 2. We're going to look at artificial intelligence and decentralized physical infrastructure networks. There's real world assets and tokenization. We've got meme coins. And then these are just the World Liberty Finance tokens. So we're just going to keep track of which ones they're actually acquiring and just kind of see the performance. We might take entries in here, and you can kind of see where some of these kind of overlap with some of these narratives over here. But I also kind of just highlighted some of the ones I do like more currently. So for layer ones, I'm kind of looking at Solana, Avalanche, Near, and Sui. So Solana's like the biggest retail L1 for sure. It's got the most transactions, the most volume. And then we see here Avalanche. That's going to be kind of a gaming focused L1 is how I think of it. So Web3 gaming is another big narrative. I personally am just not really fully sold on it. I was a big gamer when I was a kid, and I just don't think Web3 gaming's quite up to the quality that it needs to be to really take off. That being said, it does go on crazy runs at times, so it doesn't hurt to have exposure in that space as well. But yeah, so we see AVAX covering the gaming. Near, that's kind of an AI focused L1, so you can capture some of the AI hype here. And then Sui, that's a new L1. A lot of people are considering it the Solana of last cycle, and it is a US based crypto made from some previous engineers from Meta. So yeah, good team, strong backing, US based, so they have some likely favorable regulation, and kind of has that new kid on the block hype. So these are some other ones I do like as well. I don't really like Tron, but I just put it here because it's one of the World Liberty Finance tokens. But I like Caspa. Ton Coin is it for Telegram. It's good. I'm not sure about H bar again. That's another one I think could be one of those ones that's really tried to pump by the government there. So we'll see what happens with H bar. We did see when there was announcements of ETF applications coming in. H bar was one of those U.S. cryptos that was pumping and outperforming, so it could do well, assuming continued adoption of U.S. based crypto. Then we've also got Injective and Celestia are two other ones I watch. So I like all of these ones really. It just depends at the right valuations. These are the four I would really kind of focus on personally right now. When we're looking at layer twos, you have Polygon, you have Arbitrum, Optimism, and this is Stacks. So Stacks is actually a layer two on Bitcoin. I'm not as bullish on Bitcoin layer twos as I am on the Ethereum layer twos. So these are essentially just going to allow Ethereum scaling at a much cheaper cost, and that's why they do so well, especially during times where Ethereum goes and outperforms. So for the market so far, basically Ethereum's just been lagging for the longest time. Generally, that doesn't occur forever, and it will reverse to the upside and go on a period of outperformance. So that's where we're going to start to see these layer twos really start to perform well. These three are all good options here, I think, to look into. Looking at artificial intelligence and DPIN, so that decentralized infrastructure network, we see Render. Render is a good option here. I wouldn't know if I would focus on Render personally. Virtual is a big one, so AI agents are a big hot topic lately. Virtual is the biggest and the base kind of currency for those projects. So they've done well. We do have a position open in them right now. Fetch AI, another good one I like, worth looking into. AIOZ, and then BitTensor Tau. So these are four I would consider maybe looking to accumulate for a cycle hold position. Moving on to, sorry, we don't have AGIX because they actually merged with a different one. But there's also some smaller ones. So Arweave, it's like a storage solution. So that's another one. Yeah, we figure like these decentralized AI projects will need decentralized storage solutions. So Arweave is one there as a potential. And then there's this small kind of Nosana. It's an AI project on the Solana blockchain. So if you do think Solana and its ecosystem are going to go on to do well this cycle, they already have done very well, so just keep that in mind. But yeah, stuff like this that's actually on the Solana chain might go on to do very well. We see here real world assets tokenizations. There's only a few I really look at in terms of this category. Link is a really high cap. It's going to be lower risk, less return. But that being said, I do think Link potentially stands the best chance at being the most utilized in terms of real world assets and tokenization. And then we've got Ondo and we've got here. So these are the three I'd be looking at for real world assets. Meme coins. There's endless amounts of meme coins you can really get into. Obviously, Doge has a big narrative this cycle with the Department of Government Efficiency affiliation. I mean, obviously, no direct official affiliation, but Elon is pumping it every chance he gets. We all know how involved in Doge he is and has been over the years, so we can kind of expect that trend to continue. We've got Pepe here. Pepe is a new meme coin this cycle, but it is based on one of the biggest internet memes. So it's got a lot of notoriety, and it's based on Ethereum. So when we do start to see Ethereum outperform, I would expect to see Pepe outperform. And then we've got like Sheeb. So Sheeb, I don't know how much I would put into Sheeb this cycle. It performed very well last cycle, but I think that's because Doge did so well. And then people were just looking for that next best meme coin, and that was Sheeb. I actually do consider Pepe to essentially be the Sheeb of this cycle. So kind of I would be focusing more on Pepe, less on Sheeb personally. And then I highlighted Brett. So this is the biggest meme coin on Base, which is the Coinbase network. Just if we do start to actually see that US push for crypto, as well as that ease of regulations, we're going to start to see Coinbase really able to start listing a lot more of these coins and allowing people to trade them. So I do think Brett stands a decent chance at running if we do have that Coinbase narrative really take off. Otherwise, I would maybe look at WIF. So that's one on Solana there. It's probably would be my next choice. But yeah, and then we've also got our World Liberty Finance token. So Ethereum, I'm bullish on Ethereum. Obviously, I want to see it outperform Bitcoin going forward. It's been rough for the past while, but that's kind of why we've just been nibbling a little bit here and there. We're waiting for that bottom confirmation and trend change before we kind of start to take bigger bets. We got Aave, Athena, Tron, and Link. So again, other options here, ones worth following. We'll kind of follow those as we go. So I'll just show you here as well on Into the Cryptoverse. This is just the crypto screener. So you can come here and I'll show you, I actually just rank it based on the fiat risk. So essentially, the higher fiat risk means that the price is mathematically less likely to rise against the US dollar, and then vice versa for the lower fiat risk. Some of these coins are pretty new, so you kind of have to take the risk with a bit of a grain of salt. But you can see here, like XRP, Solana, Aave, some of these coins are definitely in their higher, more extended risk levels. That being said, generally they can go to that 0.9 risk for a cycle top. They can also stay in these upper risk levels for extended periods of time. So, but it is interesting to note, kind of we can go down there and take a look at the different ones and the relative risk. So obviously we see that some of these lower coins down here, like Polygon, very low risk. It's been quite a lagger this cycle. We can take a look at that chart in a second here. We can go up. Cosmos, another one, pretty low risk. Sheeb, lower risk than Doge, but I do believe Doge has more upside just due to the Elon affiliation. Again, just banking on anyone to kind of pump your bags isn't the best strategy, but with meme coins, there's not a lot of fundamental value behind it. So you kind of understand in that sense. It is a gamble, but I would say Doge is definitely the safest meme coin out there if you're looking to kind of get some exposure in that. And then, yeah, so just you can see different risk levels to keep in mind. Obviously, Solana and XRP are looking pretty risky right now, so we might hold off on those and look for better entries. But yeah, so that's basically that, just to kind of give you an idea. And then it also shows the 24-hour, 7-day, and 30-day comparison here. So we can kind of see which ones are lagging a bit more. Obviously, some of the bigger are the worst performers in the last 7 days, being kind of all these down here. So kind of the lower risk, obviously, performing worse. And that's why their fiat risk is lower, because the performance is so much worse. Yeah, so just watch that going forward, just to compare some of these cryptos. But ultimately, the chart is kind of going to be what we decide or what we end up going with. If we take a look here, I'm just going to look at some of the major cryptos as well. I'm not too sure really what's going to happen in the market. There's a lot of uncertainty right now, especially kind of just how I alluded to that Japanese carry trade. If that does start to unwind, then I do expect that volatility that we saw previously. It took about a week to play out last time, so I would give it about a week time frame to see if something plays out similarly this time. But Bitcoin's looking good. We did get that break out of this downtrend. We tagged our 0.5 Fibonacci, and we're just continuing up. So it looks good on the high time frame. On the low time frame, it still looks all right, but again, we're just kind of in this bit of a consolidation pattern. Yeah, just going sideways. We do want to see it break out and then another higher low, and then we can continue up. We take a look at Bitcoin dominance. Here we can see we did break out and then we went in this consolidation. We did manage to hold the low here, but we do look like we might be printing a lower high here. So this is something we're going to watch. If we do print that lower high and then there's a subsequent lower low, then we are at risk of that trend, and then we might be looking at something like this. Ideally for altcoins, that's what you want to see. Like, we want to see Bitcoin dominance breaking down for altcoins to outperform. But alternatively, we could also see on the daily chart, it still looks good, just like that breakout back test. So this is still a valid target on the daily, in my opinion. That's kind of why I'm just letting dominance do its thing. I'm not really rushing into any trades. We took the swing trades that we wanted to take previously. So we don't position ourselves on green days. We position ourselves on red days in the assets that we think are worth holding and in the areas that we think are good value. So we kind of saw that with the miners. We've seen it with some of these altcoins as well. We do see here dominance does have the potential to keep going up and putting in that either that kind of macro high or macro lower high, and then hopefully breaking down from there. ETH's obviously doing well, pushing 3,400, but again, we're just kind of stuck in this bit of this pattern here. So still not breaking out of anything. We're just into resistance. So we'll see what happens. Again, we want to break out, retest, higher low, continue up, and we're in on the retest. So watching that, we'll move over to total 3 here. So that's another one, again, is broken out, retested on the high time frame, going up. It looks kind of like Bitcoin does right now. Looks good. Let's zoom in to the very low time frame, kind of see what we're looking at here. So we do see, yeah, we're stuck under this downsloping trend line, but we do have this higher low, and then slightly higher high. So assuming we can break out of this trend, I do think that total 3 could continue up. That being said, let's look at the RSI and the MACD. They could support a move up as well, so looks fine. Total 3 could break out and continue up. Others here, we do see, yeah, just stuck in that high time frame wedge that we identified previously. So yeah, nothing happening with others right now in terms of the market cap. Still just stuck in this wedge. Other dominance we're going to look at again. So this is one I showed that was breaking down. We saw alt start to dump when it did break down. So again, all we're seeing is that continued breakdown. We'll take a look at the RSI MACD, quite oversold. So they could reverse here. Let's take a look at the low time frame. Again, so we do have, we kind of, still have that lower high, currently a higher low. We do need to see this level hold. So yeah, we want to see others dominance, at least hold this low, and then come back, attack the trend line, try to break out back into that. Otherwise, from a macro perspective right now, this just looks like a bearish breakdown and back test. You can see it there. Yeah, downtrend, back test. So we did get that higher low, and then yeah, ideally we either get a higher high and subsequent higher low, and then we're entering here, hoping that the trend will change. Otherwise, I just expect this to kind of keep bleeding down. Yeah, and then this would be our lower trend line target here. Moving on. So I'll take a look at Polygon here. If I just find it. There it is. Just because it had such low risk. So it's just one I want to take a look at, kind of see if it is decent value. So Polygon, it is quite, not a new token, but they did transition to this new ticker. So there isn't a lot of price action on the current token. But if we do look at our Fibonacci levels, so we'll go from here to here just to see. And yeah, we're sitting right at that 786. We could even look at it from the current low. I would consider this, like, this will be a valid Fibonacci retracement there. You can see how it came back to that 618. So that's why I kind of draw it from this low to that high. But if we pull it from the macro low to the macro high, it also just shows us that on the very high time frame, we're still within that golden zone. We are in kind of a bit of a technical downtrend here. We're just holding this low right now. If we take a look at our momentum indicators, quite oversold. So we could definitely bounce from here. Let's zoom in a little bit. Yeah, still just sideways consolidation. Really, nothing. Nothing I think is worth really jumping into at this moment. But interesting to note, Polygon basically within that high time frame Fibonacci golden zone. So it might be a decent cycle accumulation. But personally, I'm just kind of going to be waiting on that one for a little bit. We can look at it on its Bitcoin pair as well. See if we can get a better idea. So we see here. It is actually holding its lows on the Bitcoin, or it's holding this low on the Bitcoin pair. But again, this is that technical downtrend. So until we reverse that structure, we're not really going to be interested in Polygon. We want to be sure that it's bottomed on its Bitcoin pair so that we can continue to go up and outperform Bitcoin in the future. So just waiting for those. Yeah, so a lot of uncertainty kind of in the market right now. Obviously, we see Bitcoin and crypto doing well, but we see some kind of struggle from the traditional assets here. This is kind of a better gauge, I would think. We can experience little short pumps from Bitcoin and crypto that are sold off after. So just something we're watching. Yeah, we do see the risk off assets performing well and all the major indices red. So we could be still due for some more volatility in Bitcoin and altcoins, in which case we're just going to be looking for more of those entries and then, yeah, going from there. But we will move on kind of here. I will just show you this. I just want to show you a video quickly kind of regarding the miners. This is what I talked about, that Cantor Fitzgerald analyst. So just give this a listen and I'll be back in a minute.
Angle here. What is the power need that you foresee? Because we're hearing reports that to power something that could have 1 million GPUs, do you have to get nuclear involved? Does Texas have the capability for that?
The issue with nuclear over the short term, it takes a while, right? There's a couple companies out there that I don't cover that are maybe 10 years out, but you've seen what Microsoft is doing with 3 Mile Island. Even that's 5 years out. This project is going to spend $500 billion over the next 5 years. You're not going to get nuclear before that. So the question is, where do you get the power that you're going to spend $500 billion on? If you kind of run the math on AI data centers, it's $12 million a megawatt of just CapEx to build it. And that doesn't include the GPUs, which is, looking at Blackwell today, somewhere around $30 million a megawatt. So $500,000, you're going to need anywhere from 12 to 14 gigawatts. And that's the crux of the issue, right? You can spend all this money on GPUs, but if you look at the data center industry in the US, it's only 21 gigawatts, and that's what's been built over 25 years. And of those 21 gigawatts of data center capacity, the power density on those racks is maybe less than 20 kilowatts.
Okay.
And that's the crux of the issue is Blackwells need 60 kilowatts, if not more. So you can't use legacy data centers. So all that power you can't use. So you need 12 to 14 gigawatts of new power. And that's where the miners come in, right? They have.
All right, so yeah, you can you see there basically this analyst from Cantor Fitzgerald talking about how Bitcoin miners could be the source of power for these AI companies. Again, he's saying the current data center capacity is old legacy data centers that aren't able to actually support some of the infrastructure necessary for AI compute. So that's kind of why we've seen companies like Core Scientific as well as TeraWulf signing these AI deals. We see Iris Energy exploring that. We see Riot also kind of exploring that revenue stream. So yeah, lots of miners looking to kind of diversify into AI HPC. We also see Cypher. So again, they're looking for, I think they said about 14, 15 gigawatts of energy. Right now, according to my calculations, the miners that I follow kind of have about 5 gigawatts actively mining right now. So that's a lot of a lot of the necessary power required. Obviously, they're not going to divert all of their operations to it, But it's also important to note a lot of these Bitcoin miners do have multi-gigawatt pipelines over the next couple years. So he talks a little bit further on in here about how some of these nuclear sites and some of these other data center sites, they're 5-10 years down the line before they're projected to be finished, while OpenAI is wanting to spend 500 billion over the next 4 years. So whoever has the power available, I think, is really going to garnish a premium on that infrastructure. So that's where we see the miners coming in. They've essentially been developing and building these sites over the past couple years, and then that's why they're set to finish constructions in 2025, 26, 27, whereas some of the AI hyperscalers, their constructions aren't set to be done until 2030. So you can see the huge competitive advantage to securing these deals with the miners, getting their top tier data center capacity, and then you get it years ahead of the competition. So again, that's kind of why I really like miners. I like miners from the fundamental mining business itself, and then this added AI hype and potential revenue is just that makes me that much more bullish on the miners going forward. Last but not least, a little bit more bearish news. So we see MicroStrategy may face potential tax liabilities. They've got $19.3 billion in Bitcoin gains. So they may face tax obligations on unrealized gains, which currently exceed $20 billion, or almost $20 billion. So at a 15% tax rate, that's going to be about $3 billion that MicroStrategy is on the hook for. It's kind of ridiculous that they would have to pay tax on unrealized gains, but they can't claim any tax incentive on unrealized losses. So hopefully we do see kind of the legislation that put this in place. Maybe it gets removed. Again, we see in addition to these potential tax issues, the company did settle a tax fraud lawsuit for $40 million in June 2024. They did fail to pay income taxes during the decade that Saylor resided in the District of Columbia. So it's not the first time they've kind of run into some tax issues, which is interesting. But yeah, also good to note if there's no potential exemption or change in the legislation, then MicroStrategy is going to be on the hook for a massive tax bill. And we also kind of expect that from miners as well who have a low cost basis. But at the same time, MicroStrategy has so much more Bitcoin at a better cost basis than pretty much every publicly traded company. So their tax implications are going to be a lot worse. But that's all there is for the news, a little bit of macro, some miners, some altcoins. We will keep watching the charts going forward, looking for the best risk-adjusted entries. But thank you for watching, guys. If you like the content, please like, share, and subscribe. It all means the world to me. And until next time, have a great day, guys. We'll see you later. Bye.